Hello everyone, welcome to the Crypto Wealth Cafe, brought to you by Dacxi, powering serious crypto wealth for serious crypto investors. So this is our second episode of the Crypto Wealth Cafe. Good to have you along for the ride. Sit down, strap in, pour yourself a big cup of coffee and enjoy your time here at the Crypto Wealth Cafe. What we're going to do is what we always do, which is we'll start off with a quick look at the markets, see what is happening in the markets for this week as we close down the year. We're actually only 2 days out from Christmas, and then I think we'll learn a little bit about Web3 in this episode. Is Web3 the next big wealth generation opportunity? It just might be. So yeah, do you know what Web3 is? Time to start to get familiar. That's what we're going to do today. All right, let's go. Okay, well, we start at Dacxi.com. That's our home screen, just because, of course, this show, the Crypto Wealth Cafe, is brought to you by the wonderful people at Dacxi. So if you're a crypto investor or a potential crypto investor, Dacxi is a good way into the ecosystem, and you can learn about the different paths to crypto wealth here at Dacxi.com. But for now, let's get on with the show. So we'll start with coin market cap and just see where the price is today. A couple of days out from Christmas, as I say. And look, Bitcoin is about 48,600, so just a little bit under $50,000 US. Ethereum is just a touch over 4,000 US. So, I mean, really, it's not the super bullish December that many were perhaps looking for earlier in the year, or predicting even, but it's not super bearish either. I think we're just we're kind of in the middle, no man's land at the moment, while we wait to pick a direction. Certainly for the short term, I think the longer term direction is always good. Of course, it will be volatile. That's crypto. But let's just have a little look. So here's the Bitcoin chart at the moment on TradingView. So, you know, this is that all-time high back at the start of November. First week of November got up to about $69,000 US. Things are looking good, but of course, you know, we've had a little bit of a downward trend since then, and now we just seem to be kind of consolidating in this middle ground. But it's not bad. I mean, you know, I think 2-3 years ago, if anyone had said, would you be happy with a $50,000 US Bitcoin at the end of 2021, I think, you know, most people would have said that's pretty good. So I think you got to keep that in context in the wider picture. And you know, the longer we can perhaps consolidate here, who knows? I think we're just setting up for a resumption, if you like, of the bull market and deep into 2022. But let's not get ahead of ourselves right now. You know, where is Bitcoin? So I've got a few charts here that just show what I'm talking about, just being in kind of that middle ground. So this is a heat map of the 200-a-week moving average. And so, you know, once we get sort of up top, that goes into the red, and that's generally a sign that things are getting overheated. We never even got into the red this year or this cycle. Back in May, certainly started to get warm, but now we're firmly back in the cool zone, and sort of maybe heading back down to that 200-week moving average. Same kind of thing on the Puel multiple here. So that's this red line here. It just shows, you know, down up in the red is a good sign that the market is getting hot and overheated. Down in the green is when the price is in the dumps, and that's typically, you know, it's the bear market, but that is really the buy zone. That's where you want to buy. In between is, I mean, it's not, I call it no man's land. It's not really no man's land. It just means hold a dollar cost average, keep adding to your position for the long term, do what you're going to do. But yeah, so again, that's where we are at the moment. Same here on the logarithmic growth curve, just doing our thing. Of course, it does show that the long-term trend is always up and to the right, but it just takes time. And you got to understand, Bitcoin has only been around for, 12 years? And, Bitcoin has done astronomical things in those 12 short years in terms of the global adoption, the millions and millions and millions of people starting to use and hold Bitcoin. So I think in that 12-year period a lot has happened. Doesn't matter if we have a little bit of a cooling off or consolidation period now. That's good for the long run. Last one we'll look at, stock to flow. I'm sure you're familiar with the stock to flow model. It's a little bit controversial. In theory, I think people were hoping or looking, even Plan B, author of the model, he did say that he wanted to see Bitcoin at an average price of around $100,000 US, really by this month or very soon, for the stock to flow model to stay intact. But he has also argued that we're just in the lower bound of the stock to flow model, and could still come right in the next year. So we'll have to see. All right, let's keep it moving. I said we'd talk about Web3. I'm sure you've heard about Web3. Web3 is quickly becoming a big topic around the world. Could Web3 be a big wealth generation opportunity for you or for investors around the world? Quite possibly. At the very least, probably good to start to understand, even at a high level, what Web3 is, because you're going to see a lot more people talking about it. So all I'm going to do today is just really quickly run through some tweets, some charts, some images, and some text to get a few different perspectives on why Web3 matters. So this is written by Chris Dixon, who's one of the head honchos at Andreessen Horowitz, the big VC firm. So Chris writes that Web 1, early days of the internet, was about open protocols, open source, decentralized, governed by the community. And a lot of the value was, goes to the users and builders. Of course, this is a long time ago. Do you even remember what that was like? This is pre-2005. Web 2, which is really, what most people think of as the internet today, is about siloed, centralized services run by corporations. So it's the big tech guys, right? Google, Amazon, Apple, Facebook, incredible companies that have done incredibly well, and they've built these incredible products that we all enjoy. Of course, the trade-off is, in return for using those products, the user becomes the product. So it's that old saying, if a product is being given away for free, that makes you, as the user, the product, because you're being sold as cattle to the advertisers effectively. So that's what's been happening. The promise, of course, of Web3, which comes next, is going back to that open source, decentralized, community-governed ethos or nature of the original internet, but with the advanced modern functionality, all the toys and whistles that we expect out of the modern internet. But instead of the user being the product, it's about everyone being able to earn or win or get a piece of the pie. So in a nutshell, that's kind of what Web3 is. Is there anything else I want to look at on here? Not really. So let's go to the next. What have we got? Here's just a little chart, so it puts that all into perspective as well. You feel free to pause this if you want to digest that, but I think there's probably a simpler way that we can try and understand this as well. So let's keep going. So if we simplify it again, Web 1 it's the information economy, right? It's really just newspapers online, or being able to read text on a bulletin board, that kind of very early internet experience. Web 2, the platform economy, so it's being able to read and write, so you can send emails, you can write blogs, you can do Facebook posts, WordPress, all that kind of stuff. Web3 is the token economy. So it's being able to do all that, but add in new financial incentives and means to get paid. How do we do that? Well, the easy way to do that is tokenization. So it's everything from cryptocurrencies to platform tokens to crowdfunding tokens. Basically, the tokenization of everything is where we are going, and it's just the idea is it's greater shared equal participation and revenue opportunities for everyone. Can we simplify it even more? Of course we can. So I like this. This is Web 2 versus Web 3 in the most simple way possible. Excuse my face over all of these lovely graphs. I hope you don't mind, but you can see what this means. If you can't work it out, essentially Web 2 is the ability to get, say, 3,000 Instagram likes, Instagram hearts, or Facebook likes, or Twitter retweets. That's great. It's always cool to get those dopamine hits of people liking your posts, but it's kind of meaningless, really. You're not earning anything from that. Whereas Web 3 is the ability to earn, say, 3.0 ETH for that same content. So easiest example of that at the moment, of course, is NFTs. So instead of putting out your content for free on Facebook or Instagram, hey, you can monetize it with NFTs. Easy as that. That is just one simple example. All right, let's put this into a bit of context. I like this. So this is the context for Web 3. At the moment, we've got two kind of competing global tech paradigms, right? And they're both flawed in very different ways. So our friends in China, they have the kind of top-down digital authoritarianism model. It's censorship. It's based on the firewall. It's enforced by violence and the threat of violence. We see that all the time in China. No such thing as free speech. And if you do run afoul of the Chinese state, well, you'll find yourself kidnapped, taken out into forced hotel holiday. See this all the time. Jack Ma, I think from was it Tencent? He got taken out by the Chinese state. The tennis player, I forget her name, but you would have seen that. She got taken out by the Chinese state. It's just two big examples. Happens all the time. So obviously that's not. That's not what we want. No one wants to live under a system like that. So, luckily here in the West we don't. So we have what we can refer to as the big tech system. So it's, Amazon, Facebook, Google. It's fine. It's not as bad as China. We've got all these cool products and services, but all the profit is going to Mark Zuckerberg and the heads of Google and Jeff Bezos at Amazon. It doesn't go to the users of the platforms. So the idea is, is there another way? Is there a third way? And that third way is Web 3. All right, let's again put it into context. What's happening in the world at the moment is because of these the two kind of competing tech paradigms that we were talking about on the previous slide, and things like pandemic and perhaps the loss of trust in institutions such as the kind of the legacy media and legacy financial system. There's just people are less inclined to trust the old way of doing things. So that's what this chart shows. So basically, it's showing that people see governments as both not very competent and not very ethical, which is kind of it doesn't really say great things about our great global democracies, but yeah, it is very much the case. People they don't trust the government, and the governments, many of them, especially in the pandemic, as one example, have proven themselves to be not very competent and perhaps not very trustworthy. Media, much the same. Media, just not that competent. and certainly not always ethical. Non-government organizations are a little bit more ethical. They're a little bit more competent, but not great. Same with business. Business is a little bit more competent, but certainly still unethical. Point is, no one is seen as being both competent and ethical, and I guess at the heart of that's just human behavior, human nature. Humans are a little bit flawed. So I know this is a little bit esoteric, guys, but I guess what I'm saying is this is another argument for Web3, and kind of, if we can program blockchains to have, if we can program the right token incentives in them that is fair for all participants, again, that is where the opportunity is for Web3. All right, let's go to our old friend Google Trends. You can see just the rise in search interest for Web3 just this year. So, December last year, not much happening for Web3, not much happening for most of this year, but just in the last month or two, it is ramped up. Now, put this into context though. If we compare Web3 search interest with Metaverse, so Web3 is the blue, Metaverse is the red, then Metaverse is huge. I mean, obviously the simple explanation for that is Facebook rebranding to Meta way back about here. But point here is, they're not the same thing. Metaverse and Web3 are not the same thing, but they're heading in the same direction, and it's all the protocols that are used for Web3, decentralized blockchains, open source technology, NFTs, DAOs, cryptocurrencies, all that good stuff. Those are the building blocks that are required for an open, equal metaverse. Now, if we zoom out again, look, let's just put it into even wider context. There's a fascinating book by a woman called Crypto Perez. It's called The Death and Birth of Technological Revolution. So it's heavy stuff. It's history, it's technology, but I'll give you the kind of the Cliff Notes version, if you like, which really just comes from this graph here. So her argument is that every technological revolution goes through stages. There's the sort of the early eruption, there's the frenzy, which is the financial bubble time, there's the synergy or golden age, which is when everything comes together and starts to work. It's the mass adoption phase of the cycle, and then there's the maturity, which is the end of the cycle as everything just goes out into global use. So it's this is an S curve, right? So her argument is everything follows this kind of pattern. So you can look at the same thing for cell phone adoption, electricity, cars, any kind of technological revolution. So it's the same with the internet. With the internet, we're sort of in this maturity stage now, as the first internet, Web 2.0, if you like, is just normal all around the world, apart from perhaps some places like Africa and etc., which is still catching up. But what Carlita Perez, she says that what tends to happen with these revolutions is at the same time as one revolution is maturing, the next one is already beginning. So the argument is that is what is happening with blockchain, with crypto, with Web 3, Web 3.0, whatever you want to call it. Let's say Web 3. So right now we're in this kind of beginning eruption stage of Web 3 and blockchains, and we're about to enter this kind of frenzy as we cross the chasm, and all that early adoption starts to happen, and then we're just going to travel up the S curve. And so that's going to play out over, no one knows how long these cycles take to play out, but with the pace and scale of innovation and exponential growth of technology, these revolutions, they do tend to speed up. We're 10 years into crypto now, but it's only now that we're sort of starting to get just the early maturing of some of that technology, and the real use cases starting to play out all around the world. So I guess what we're saying is, buckle up. strap in. Web3 is going to be a thing, one way or another. Blockchain and crypto are going to be part of it, and there are potentially some real wealth generation opportunities available for smart investors who keep an eye on what is happening. All right, let's have some fun. Another way to look at it is, in some ways, Web3 can be thought of as a game. I like this a blog post. It's a favorite blog post, so I'm just going to run through it. So what the guy that wrote this, Packy McCormack is his name, what he's saying is you can think of the internet as a game, and he calls it the great online game. So what he means is, for anyone prepared to invest the time in using the internet, all the tools and capabilities that you need to kind of make a name for yourself, make a reputation, and make an income for yourself are out on the internet, available to anyone. And I think this is particularly true, of course, of the younger generation. But so I'm not going to go through this right now. You can look it up if you're interested. But essentially his argument is, again, what we've been talking about. So Web 2, we've seen all the tools that are there, but now crypto, open source blockchains, and the tokenization of everything is just making it possible to monetize yourself in incredibly exciting new ways that are fun. That's crucial as well. Crypto is just more fun because he says it's going to be the in-game currency for a big game played across the internet that involves CEOs, influencers, artists, researchers, investors, and regular people. So, there's a few takeaways, but basically the idea is everyone is playing the game. If you're online on social media, you're part of the game. It's just how you choose to kind of look at it. What's your frame of reference? Are you going to be an active participant or a passive observer? Either are fine, but I think, it's just crucial to understand that the game is there, it's free to play, and it's important to realize that you are playing the game and crypto can supercharge the game. Now, if you're older and you're thinking, man, this sounds like a lot of hard work, I'm not ready to go this deep. That's all right. Show this to your kids. Your kids will get it, and for them, man, the opportunities are endless. All right. So I just think it's a nice framing. I really do recommend this post, but as I say, I'm not going to go through it all now. But man, if you want to read it for yourself, just Google The Great Online Game by Packy McCormack and show it to your kids. That's a life hack there. You can get all, go to college if you must, but I guarantee you, if you read and digest this blog post, your average, 13, 14, 15-year-old smart kid who spends all their time online as it is, incredible wisdom in here for them. All right, moving on, and look, if your kid is wants to be a developer or something like that, or you're watching this and you're a technical person yourself, then go here, web3.university. It's a fantastic resource. It's just an easy way to get the kind of an introduction into all the building blocks of what is needed for Web3, smart contracts, Ethereum, Solana, NFTs, all the different cryptocurrencies, all that stuff, just in a really easy to learn format. It's all here if you have any interest in the kind of the tech side of things. All right. And the metaverse, if you want to talk about, if you want to learn more about the metaverse, I recommend Matthew Ball. He's an author. He wrote, this is an incredible collection of essays on the metaverse. I could do a full episode of the Crypto Wealth Cafe just on these essays alone, so I'm not even going to look at one. But essential reading to understand the metaverse and where it's going. And of course, as I say, Web3, when we talk about Web3 tools are the building blocks for the essential metaverse. All right. start to finish off, guys, with a couple of tweets. So I thought this was interesting. This is in the context of a big story in the New York Times, but the quote is, "Crypto's allure has been so irresistible. Some of the biggest tech companies, those big Web 2 companies, at Google, they are very concerned about how they're going to keep their employees, hold on to their talent, because they're all moving into crypto, simply because crypto is where the opportunity is. Web3 is what is exciting them. And so, if you're a smart person at Google, you're going to be tempted to move into crypto. So, that's what we're saying here. Tech executives and engineers are quitting Google, Facebook, and Amazon for what they say is a once-in-a-generation opportunity with crypto. And look, in tech, there's a saying, follow the talent, right? Follow the smart money. Look at what the smart people are doing and try and do that. So, point being, if the smart people from Google, Amazon, and Facebook, if they're moving into crypto, it must be something there, right? Even still, really. This is the article in New York Times. You can read it if you're interested. All right. Is there a counter argument to all this good stuff that we're talking about Web3? Kind of. So Jack Dorsey, I like Jack. Jack Dorsey is the founder of Twitter, the founder of Square. He's a Bitcoin guy. Excuse me. And he said today, you don't own Web3. The VCs own Web3. It will never escape their incentives. It's ultimately a centralized entity with a different label. So, I don't know if I really agree with Jack. As I say, I like Jack, respect Jack, and look, I like Bitcoin a lot myself. But I believe in the promise and potential of Web3, whereas Jack is very much a Bitcoin maximalist. Jack had a few funny back and forwards with various people on Twitter due to this tweet. And Elon Musk, funnily enough, is on Jack's side. Elon Musk keeps tweeting some some memes about Web3 and how he can't find it. And, so someone else says it's somewhere in the toilet. And Elon says, yep, just keep going. I think that's a clip from Trainspotting. But, I guess I'm just saying that, there's always another side, there's another view. So Chris Dixon, who is the guy that wrote that Web3 essay at the beginning of today's show, he says, first they ignore you, then they laugh at you, then they fight you. This is where we are, and then you win. Jack Dorsey couldn't help himself. He says, hi Chris, you're a fund determined to be a media empire that can't be ignored, not Gandhi. So, yeah. This is why I like Twitter, guys. You got to understand, this is the real titans of industry. Jack Dorsey, founder of Twitter. Chris Dixon, one of the leading tech investors in the world. And here they are debating with each other for, essentially our entertainment. And Twitter is a free service. You can, I think that's just a great example of, why I like Twitter, the entertainment it provides and the value it provides. All right. I said we'd finish off. We should finish off. This is just a Twitter thread from Manib, who is from Blockstack, now commonly known as Stacks. He wrote this in as a response to what Jack Dorsey said. He's just saying that the people will own Web3. VCs have reduced power and ownership in crypto protocols. So founders, VCs, and employees primarily owned Web2 companies. So it means the general public don't get the upside, as we've discussed. Web3 protocols, as discussed, are different. Web3 founders do understand the power of community, says Manib. And really, the takeaway is, in summary, Web3 drastically reduces the power and ownership of VCs. Venture capital still has a role because it is needed to fund those early stage risky ideas and reward all those people who take on risk. With the end result, Web3 is a net win for internet users. More power to the people. All right. That's it for Web3. Let's finish this off. I just thought this is maybe a nice way to end. Just kind of a, it is Christmas time, so this is just a chart that shows, despite all the doom and gloom and the bad pandemic news and all the, if it bleeds, it leads, bad news media headlines. Of course, it's the Steven Pinker argument. Just the amount of people around the world that are living in extreme poverty, it continues to drop every year. So I thought that's a nice Christmas message. So wherever you are in the world watching this, from me to you, all the best for a fun and relaxing Christmas period. I hope you do get a little bit of a break. I'm certainly looking forward to a break myself. So yeah, on behalf of everyone here at Dacxi and the Crypto Wealth Cafe, that's me. We'll see you in the new year. I think the people at Dacxi, they also want you to know that the Dacxi chain is coming in 2022. It's a crowdfunding solution. It's going to show the promise of Web3 as well. It's all about unlocking funding opportunities, crowdfunding opportunities for people with new innovative ideas and people who want to invest in new innovative ideas. It's just another way that Web3 can unlock incredible and exciting new wealth generation opportunities. All right. That's us. Yes. Thank you very much for listening, everyone. My name is Andy, and this was episode 2 of the Crypto Wealth Cafe. We'll see you back here early in 2022. All the best and Happy New Year.